All right, let's talk about Medallion Financial, ticker MFIN. They just dropped their Q3 2025 earnings, and wow, it was a real surprise for Wall Street. So we're going to break it all down for you. The numbers, the strategy, and of course, what we think it means for the stock.
I mean, look at this. Right out of the gate, the big story was this massive earnings beat. We're talking an adjusted earnings per share that was nearly 60% higher than what the street was expecting. You just don't see that every day. A surprise that big? Yeah, that definitely got everyone's attention and set a super positive tone for the entire call.
So, no surprise. The market loved it. And why wouldn't they? The company basically knocked it out of the park, across the board. Let's dig into the headline numbers that got everyone so excited.
Okay, let's look at the tail of the tape here. The adjusted EPS came in at a really strong 46 cents. Now you'll see the official GAAP number is lower, down at 32 cents. So what's the difference? Well, it's because of a one-time strategic charge. And don't worry, we'll get into exactly what that was in just a bit. But the really crucial part here is the revenue, their net interest income, which also came in ahead of expectations. So really, it was a clean sweep.
And this is what that looks like in the real world. The stock popped over 6% on the day. That tells you that investors saw right through that one-time accounting charge. They were focused on the core business, and they clearly liked what they saw.
All right, so let's pop the hood and see what's powering this engine. We're going to take a look at what's actually in their loan book and how they're managing all that risk.
So the real engine room for Medallion is its consumer lending. And it's pretty focused in two main areas: recreation, think RVs, boats, that kind of fun stuff, and home improvement. Together, these two make up a whopping 94% of their entire loan portfolio. This is their bread and butter. It's where they make their money.
And it's not like demand is slowing down either. They wrote almost $428 million in new loans just this quarter. That's a huge number. It shows you that people are still out there spending in these niche markets and that Medallion's team is executing really, really well.
But here's the smart part. Growth is great, but not if it's reckless, right? The company actually increased its allowance for credit losses. So what does that mean? Well, it means that for all those new loans they're writing, they're also putting more money aside just in case some of them go bad. It's disciplined. It shows they're not just chasing growth for growth's sake.
Okay, so beyond just the nuts and bolts of the quarter, management was playing chess, not checkers. They made a few key strategic moves that are really about setting this company up for future profits.
Remember that one-time charge we talked about? Well, here's the story. Management basically decided to pay off some old, expensive debt. In this case, it was preferred stock. Now, it cost them $3.5 million this quarter, which is why that GAAP number looked lower. But, and this is the important part, it means their cost of capital is now lower for the long haul. It's a classic case of short-term pain for long-term gain.
Now, this is the growth story you absolutely need to be watching. They have this strategic partnership program, and it is just exploding. We're talking a record $208 million in originations this quarter. That is nearly half of all their new loans. And the best part? It's a capital-light model. This thing is becoming a serious growth engine for them.
Just a few other quick hits from the call. They're still wringing out the last bits of cash from those old taxi medallion loans. That portfolio is pretty much in the rearview mirror now. And importantly for investors, they're keeping the cash flowing back to shareholders with a steady dividend and an ongoing share buyback program.
Okay, so that's what happened in Q3, a really strong quarter. Now let's turn our attention to the road ahead. What does all this mean for the next earnings call?
First, let's get some perspective. Even with this great quarter, if you look at the past year, MFIN has actually lagged the rest of the financial sector. The big financials ETF XLF is up over 20%, while FFN is up just over 8%. Now that is an interesting gap, isn't it? It kind of raises the question, is there a catch-up trade here?
So what could close that performance gap? Well, we see a few potential catalysts on the horizon. First, that partner program is just getting started. Second, management made it super clear on the call that they've got fresh capital and are ready to hit the gas on loan growth again. Plus, you got a new CEO coming in and what looks like a very stable profit margin. A lot of things seem to be lining up.
So, when we put it all together, what's the trade?
Here's our take. We think the market is getting this one wrong. They seem to be too hung up on that one-time charge, which, frankly, is already in the past. What they're missing is that the company is actually more profitable now because of that balance sheet move. The underlying earnings power is stronger than the headline number suggests.
And so here's our specific prediction for the next call. Management literally said they have the capital to accelerate growth. We're betting that Q4 is where we see the first real proof of that. We're looking for loan growth to ramp up and surprise the street all over again.
And for all those reasons, heading into the next quarter, our rating on Medallion Financial is outperform.
And as always, this is not financial advice.